Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 12th February 2024. With a week to go before the exclusivity period deadline for bilateral negotiations come to an end on February 17th, Walt Disney Co. and Reliance Industries are in the last leg of negotiations to finalize their mega stock and cash merger to create India's largest media and entertainment business. Under the terms of the talks, Viacom 18 looks set to be the single largest shareholder with 42 to 45% in the combined entity. Parent RIL is expected to invest up to $1.5 billion cash in the new entity and pick up a stake directly as well. As a group, Mukesh Ambani-led RIL will own 60%, with Walt Disney owning the remaining 40%. India and Indonesia were once famously lumped together as part of Morgan Stanley's Fragile Five. A decade later, they are investors' favorites. The outlook for the bonds and currencies of the two Asian behemoths has brightened following successful programs of reforms and fiscal restraint. The original Fragile Five, which also included Turkey, South Africa and Brazil, referred to nations perceived to be most at risk due to their heavy reliance on foreign investment to drive growth. Improving finances, as reflected in credit default swaps, show the market's view of India and Indonesia has swung almost 180 degrees since the term was coined in 2013. Cash-strapped budget airline SpiceJet is set to lay off 1,400 employees, nearly 15% of its workforce, to cut costs and retain investor interest. The airline currently has 9,000 employees and operates about 30 planes. Of these, 8 are wet leased from foreign carriers along with crew and pilots. Staff cuts have become necessary because of the carrier's ₹60 crore salary bill. SpiceJet has been delaying salary payments for several months. Many haven't yet got their January pay yet. Several large consumer goods companies including Nestle, Dabur, Coca-Cola, Mondelez, and Procter & Gamble have lined up big investments in India to set up capacity and push more premium products despite an ongoing slowdown in demand, particularly for mass products. Some of these firms are investing more than ever before as they are hopeful of a demand revival in the new fiscal.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.